Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up, and this wrap-up is for Thursday, the 2nd of September, 2021. Now, there's several things we have to remember. It's about 5:30 right now. Tomorrow, you have at 7:30 in the morning coming out the jobs data. That's going to be what the market looks at. There's another small report afterwards, but it's just the final PMI number that we need on service and so on. It's not going to be a big number. The big number is what's going to happen from the jobs data, and after that, whether the market runs crazy or whether the market doesn't react very much, I don't expect after 12 o'clock there to be an awful lot of action. Remember, the markets are not open formally on Monday. They have that abbreviated holiday. So they'll open up Sunday night, then they go for Monday. They'll be all closed by about noon on Monday, then they'll reopen at 5 o'clock. Does the volume stay heavy on a time like that? It doesn't. So beware of that, trade yourself accordingly. The other thing that I want to talk to you about, you can see that you're up in most of the indices. That's a good action. Gold still held on to its embedded reading today. So I was telling traders they have to look at that. Now the question is, can it pop through the key numbers? We'll see them in a minute. Energy prices were up strong today, and this is in large part due to what's going on from Hurricane Ida. They're going to take now 1.5 million barrels out of the strategic reserves and give them to Exxon as a loan in order to get the refineries there going to get fuel into that area. And don't worry, we have plenty of reserves. We've got about 621 million barrels. So giving 1.5 as a loan, not a big deal. Bonds and notes will wait for that action tomorrow. So let's go to the metals. You see the battleground. Could I be more clear where it came in? The high this week is 1823.60. 1818.10 is the 18-day average. To get the trend up, which it is on the daily charts, you'll see that. But to confirm, you've got to close over that 1810 on a weekly chart. Then you would have the bias up and you would have the trend up. Let's go to the trend. This is what the market's been doing, and as you can see when I put on the swing line study, you have higher lows. Unfortunately, for the moment, lower highs. So you've stepped out of the clear path of an uptrend being higher lows along with higher highs. This is a pause. Now what you don't want to see happen is the market start coming back under this low, which is 1803.40, and I'll show you why in a second here. What that would do is if you got under that, I think it would put you back for a race to the 18-day average of closes at 1794.60. A week ago, when the market was down here and started coming up, I said, look for some stiff resistance at the 100 and 200-day average of closes. Little did I know it was going to be as stiff as it is, and it's turned out to be stiff. Let's assume you can clear this area. And I think the 1834.20, there's nothing to stop the market if it can get up there, at least nothing I can see on the chart. You see that you're losing the embedded reading, but I want to do something for you. You can't count Friday because we don't know where it'll be. Your numbers were both over 80 today. They were both over 80 the day before, the day before, the day before. You don't want to get what my good friend Ron, one of our brokers, calls stochastikitis. You don't want to get that. That's the term he made up, and he's right. So you have to wait almost to see that report in the morning and what the market's going to do from it. But I think the pros are not heavily involved in the market. I think that they've come out of a lot of positions against those averages. The gold-silver ratio, when the market was up here, I was telling you, watch out. If it's going to correct now, it'll probably make a run for the 18-day average of closes, but then that's where the battle starts. And it's just like when we were looking at the weekly chart on gold. The market's going to get a lot determined, hopefully tomorrow. It could leave us in limbo, hard to tell. Silver's got a trend up, higher lows, higher highs, but you've made your run at the upper Bollinger Bands. You're overbought, you never embedded. I don't think that this is where the players are. I read an article today that the traders in Dow Jones Newswires, it was, how many liquidated their copper, and the trade isn't heavily in this market, but at the same time they're not looking for a big break. And the reason they came out was evident with China's numbers. They've been bad. China's been threatening to sell copper on the open market. Their COVID situation, their PMIs came down, and they're cracking down on factories for pollution. So the copper fell back on that news. It is still overbought. While the trend is up, overbought situations generally don't attract new buying. In the platinum market, could I be more accurate for you that the 18-day average is acting as that center line? You're just trading now either side of it. You're not able to go up or down, and you don't have a trend. You have a higher high, lower low. Nothing I see there. In the palladium market, you still have a pattern of higher lows, higher highs. What platinum and palladium need are chips to be made to get the workers back in the auto industry all over the world producing cars. Once they produce them, you need the catalytic converters. It's nice that we keep talking about electronic cars, but out of every 100 cars, how many are electronic that are being made? Is it 10%? I'm not even sure, but it's probably not much more than that. That could be high. So that's what I'm looking at. That'll change over time, but copper's used in everything, not necessarily platinum and palladium. So that could be something hanging over them down the road. In the dollar index, you've come down hard. You're oversold going into the jobs data. What else are you doing? You're rubbing against the lower Bollinger Band. You can see that right through here. What's the point of taking a shot on that? None that I can see. So I think the pros came out of the dollar. If it falls, it falls. But I think they're came out, or they're coming out against that lower band, and they'll go, let's see what tomorrow offers us. That's the way that I'd be looking at it. Now, as you can see behind me, the stars and stripes, that's because we have a Labor Day special. You're going to see up here an icon. At any point, you can click it. So let me tell you what I came up with. I will give you free my charting course or my enhanced Bollinger Band course. You get to pick one of the two for free if you buy a 1-year subscription to any of my research. That could be the full commodity research. It could be a full year to the Spider ETF. It could be a full year to just the morning subscriber video. You make your choice. It starts at $156. The course itself, I retail, and it's out on the website right now, for $249.95. The enhanced Bollinger Band course, if you're not a client with me, is $75. Any way you go about it, it's a pretty good deal. This is going to end September 8th. So take advantage now, because when it ends, that's it. So this is a one-shot deal that you're getting from me, and it is Labor Day, so let's get it. If you have questions, call my staff. If you're going to go anywhere, don't go to the website looking for this, friends. Click this link. It's not on the website. We made a special link for it up here. Click on it up here, and that'll get you there. All you got to do now is hit pause, click it, and away you go. I'll see you tomorrow.